I'm Olivia Bono-Voznenko for Modern Wall Street with Sarge Guilfoyle here today. Stephen, how are you?
Pretty good. Thanks for having me.
Stephen, pack your bags. We're going to take a trip around the world today with Europe being the first stop. We received some interesting news this morning about they are lowering their rates again. What do you take on this? If it didn't work the first time, why would they do it again?
Well, lowering of the interest rates, the beefing up of the quantitative easing program, I think these things are expected. The LTRO, the attempt at this LTRO that is supposed to prop up the European banks is where they tried to throw a big bazooka at us, and possibly where they failed. All right, they're basically offering the banks money at a profit for the banks. They don't have to pay back as much as they borrow, basically. So they're creating a carry trade to prop up the banks. But what this probably does is create demand for the euro. So the very instrument they were trying to weaken, we've seen today actually strengthen. The British pound is weaker, the US dollar is weaker, while the euro is stronger. And it will probably also likely suppress lending in the private sector in Europe, because why, if you have a profitable trade on the table already in a yield-stricken environment, would you take a shot on that and lend it out somewhere else trying to make an extra dollar?
So, Stephen, are we going to continue to see them going further into the negative territory, or when will this stop?
I don't think that's productive for anyone. If I were the central banker, we wouldn't be going there, but I am not the central banker. Mario Draghi did come out today and said he wants this to be the end of it. He doesn't want to cut rates anymore. He doesn't want to beef up the QE program anymore, but central bankers lie, and they do what they have to when they think they have to do it. And I don't trust those words at all.
Stephen, our next stop is going to be China. They have been devaluing their currency, and earlier this week we saw that their exports plummeted. Why would that happen if they devalued their currency?
Well, we go back to Europe. It's a lack of global demand. All right. So basically, speaking of easy monetary policy, China's creating another 5-year plan, and things are going to get even easier over there. So you have Japan in negative rates. You have Europe in negative rates. You have China beefing up their easing policies again. And then we're going to look at an interest rate hike next week, possibly. I don't think so.
But, Stephen, you have to admit, it hasn't really taken a toll on our markets at all. Why not?
Well, today we've traded with Europe. Today we've seen European sovereign bonds and U.S. Treasuries trade off. We've seen European equities and U.S. equities trade off. So today we are mimicking the European trade. We may not always do it, but today we are seeing that.
And what about China?
China was down 2% themselves, so we'll go for the hat trick. China is its own animal at this point. No one really trusts the numbers. No one knows what the numbers truly are. The numbers haven't been pretty, which lends to the fact that maybe there is some honesty behind those numbers. But generally, people are letting China trade on an island right now, and they're not really impacting even their Asian neighbors.
And, Stephen, put your sunnies on, because our last stop is New Zealand. They came out with some interesting news last night. They took a rate cut, too. Is there a cold going around, or what's going on?
I think I think a lot of these countries, now the Reserve Bank of New Zealand is actually well known for telegraphing their intentions ahead. They're actually a respected central bank out there. But I think a lot of these countries that aren't frontline or big time or well-known central bank countries, I think they're feeling the pressure to cheapen their currencies because everyone else is doing it. So if they get stuck with an outlier currency, which puts their exporting corporations at a disadvantage, they just can't allow that, and they have to fight against it.
Well, Stephen, thank you so much. I bet after wrapping your head around all that data, you're going to need a vacation yourself, aren't you?
I would like one, but I don't think so.
Well, thank you so much for being our economic tour guide today, Sarge Guilfoyle. Thank you.